Assalamu alaikum, everybody. We will wait for a few minutes until other participants also join. Okay. Assalamu alaikum, everybody, and welcome to today's webinar on revamping of public offering framework. My name is Umair Ahmed, and I'm part of primary market development team of SECP. The purpose of today's webinar is to discuss the draft amendments introduced by SECP in its regulatory framework for public offering and have a viewpoint of the stakeholders on the same. This webinar will be led by Mr. Shozab Ali, Commissioner SMD, and Ms. Najia Ubaid, Head of Department of Primary Market Approvals and Development Department, will assist the Commissioner on the same. Now I would hand over the session to Ms. Najia for her valuable input. Over to you, madam.
जी अस्सलाम वालेकुम। अच्छा जी, we actually what we did that we circulated like offering regulations last week before Eid holidays. We just wanted to have everybody's view how they feel, and principal objective of those regulation was to increase the supply and facilitate on three accounts. One, obviously, for all three stakeholders, meaning investors, issuers, and intermediaries. So how can we sort of facilitate all three of them in terms of making the supply more available, both in terms of cost of issuance and ease of doing business? So for that facilitation, we have discussions with the banks, with AMCs and all of them, and we have different. Our colleagues from the banks would remember that we specifically have a roundtable with them just to sort of understand what are the issues in terms of issuing or increasing bond issuances in the capital markets, and what are the issues they are facing. So we actually tried to incorporate their concerns to whatever extent we can do. And based on that, we have revised our regulation, and now we are sharing those regulations with the market. Simultaneously, we have made changes in the market making rules or regulations of PSX, Pakistan Stock Exchange. That we are doing simultaneously also. So based on that, now we want to have a feedback from our colleagues and stakeholders from the industry. So what I will do, how the format will run, that Umair will be our moderator for the session. Second, now I will request my colleague who's heading this primary markets approval and development department, Madam Najia Ubaid. She will run you through the highlights or main changes, what we have made in our public offering regulations. And after that, we will actually request your questions.
Assalamu alaikum. This is Najia. As already enumerated by Commissioner Saab, the major objectives are again bringing ease of doing business for the stakeholders, reducing the costs, increasing liquidity, bringing liquidity of the debt supply instruments. So again, the main purpose is to bring ease for the participants, for the intermediaries, for the issuers, and the purpose is to allow them to tap the capital markets easily. So now I'll be running through the changes that we have proposed. So the first change in terms of bringing in ease in doing business and increase in the capital market supply of the capital market instruments is that we are proposing an exemption to be granted to the government guaranteed debt securities, multilateral agencies, and state-owned enterprises that hold instrument rating of BBB+ and above from the applicability of the eligibility criteria. As you all are aware that there is an eligibility criteria that requires that the issuer should have at least a profitable track record of 2 preceding financial years from its core business. If in case it's non-compliant, then it is supposed to submit the business plan. There is a lock-in period clause of 2 years consecutive profit until profitability disclosures related to loss making, and there is a requirement of 51% ownership continuity for the preceding 2 financial years. So these entities, like these instruments, that is the government guaranteed debt securities, the instruments issued by multilateral agencies, and the SOEs holding the BBB plus rating and above, shall be exempted from this, are proposed to be exempted from this requirement. The next proposal is that the appointment of the consultant to the issue be made optional. Presently, it is a mandatory requirement. If an issuer wants to come for the public offering, it is supposed to appoint a consultant to the issue. We are proposing that it be made optional. So the issuer itself can now come to the commission for approval of its own prospectus. There is another requirement of independence of the book runner, underwriter, balloter, and share registrar from the issuer. We are proposing it to be abolished. Again, in line with the global practices, there is no globally such requirement of independence of the book runner, underwriter, balloter, and share registrar. Accordingly, to bring harmony, we are proposing this change. A new competitive bidding process for the debt securities instrument has been introduced, is proposed to be introduced. Presently, there is only the competitive bidding process available for the equity securities. So since no process was available, accordingly, no spread discovery was possible. Through this process, the spread discovery will now be possible in case of debt instruments as well. It will bring in transparency and will reduce the cost, as we saw in the latest successful issuance of Pakistan Energy Sukuk. That was of 200 billion, and there was KIBOR minus 0.10% spread discovered, and that was only possible because of the competitive bidding process that was undertaken through Pakistan Stock Exchange. Again, the same with the motive of encouraging the listing of instruments. There is presently a requirement on the sponsors to retain their entire shareholding in the company for 12 months and 25% of the post-issued paid-up capital of the company for 3 financial years. So if someone is coming for the first issuance, initial public offering, this requirement is still in place. We are proposing that clarity be brought in with regard to the secondary public offering issuances and the public offering of other class of shares. Like if an entity wants to bring in the preference shares and get it listed, so it will not be required to comply with the regulation 512 as specified above. With the aim to facilitate capital market intermediaries, we are increasing the umbrella and the universe of the consultant, proposing to increase the umbrella of the consultant to the issue and mutual funds. Scheduled banks, DFIs, investment banks that are registered with PSX as market maker are proposed to be allowed to act as consultant to the issue for IPO of both debt and equity securities. Additionally, audit firms that are engaged in professional management services are also allowed to act as consultant to the issue. One caveat has been added, that is in case of IPO of equity securities, scheduled banks, DFIs, and audit firms can only act as consultant to the issue in joint capacity with the securities broker. Investment bank can act as the consultant to the issue in individual capacity as by themselves. Mutual funds, we are proposing that they be allowed to act as underwriter, subject to the NBFC framework requirement. Presently, AMCs and mutual funds are not allowed to act as underwriters. However, we are proposing, and certain amendments definitely will be required in the context, if agreed. As mentioned by the commissioner, that we are also proposing certain amendments in the market making framework. Basic purpose is to bring in liquidity. We have seen that market making framework have been reviewed a lot of times, but until now it has not yet been able to achieve the desired results. So now we are proposing that along with securities broker, scheduled banks, AMCs, investment financial services, and DFIs are proposed to be allowed to act as market maker. To provide the services of market maker would register itself with PSX. At registration, the market maker will intimate the PSX the instruments that it would like to act as a market maker for. Market maker can add or remove any listed debt security for market maker to which he wants or he doesn't want to work. Market maker would not be required to hold any percentage of inventory. As earlier it was required, then it was an agreement between the issuer and the market maker. We are proposing that no such requirement should be there. All the market makers will be required to bid and ask quotes on the screen on a daily basis for their respective listed instruments for which they are acting as market maker. All over-the-counter transactions executed by the market maker with any other market maker will also be required to be reported to PSX at the end of the trading day. Few minor amendments just to reduce the regulatory burden. There is a requirement on the nominee director and independent directors relating to clean CIB report that is proposed to be relaxed. So these are the major amendments that we are proposing, and these amendments are available on the website of SECP for public comments as well. It will be encouraged that written comments be also shared. In addition to raising the questions here, written comments be also shared with us. Now the forum is open for you to send your questions. I will ask Umair if we have received any kind of questions up till now. I have seen a few questions. What is the market maker new role? Who can become the consultant? As already mentioned in the presentation as well, that consultant to the issue, scheduled banks, DFIs, let me just schedule banks, DFIs, investment banks that are registered with PSX and as market maker for the debt security instruments can act as consultant to the issue. Additionally, audit firms can also be the consultant to the issue. For these, all entities can act as consultant to the issue, but they have to come in joint capacity if they want to act as consultant to the issue in case of issuance of equity securities. And investment banks can act as consultant to the issue by themselves. They need not to come in the joint capacity. Hope it clarifies, but even then, if you have some question, you can write it now. We just have received that if a bank is not a market maker, can it become a consultant to the issue? No, it has to be a market maker registered with PSX to act as consultant to the issue for the debt securities instruments. And for equity instruments, equity securities, again, some clarity has been sought on inventory holding requirements of the market makers. Earlier, there was kind of 1% inventory holding requirement for the market makers. Then it was left at the discretion of the issuer and the consultant to the issue. Now there is no requirement. Technically speaking, the market maker shall be appointed or registered with the PSX, and it will not be registered with, or the issuer will not appoint the consultant to the issue, the market maker. There is a question, have the new market making rules been formed? In the lines as I have just shared in the presentation, market making rules are being formulated by PSX since they fall in the PSX rule book. And PSX shall also be sharing the amendments through for public comments, hopefully today or tomorrow. If a company doesn't hire a consultant, do they need a broker? I just have received a question. If an issuer doesn't intend to appoint a consultant to the issue, it can itself bring its own prospectus. There is a requirement of additional disclosure that has been incorporated in the notification that is placed on the website of the commission, from where you can read the additional disclosure required. So if a company is not hiring a consultant, it can bring itself the prospectus for commission's approval. As mentioned by Shozab Saab, the Commissioner SM, that we conducted a lot of sessions with the potential issuers, with the banks, with investors, with existing listed companies, and the purpose was to understand what are the regulatory burdens. Considering the comments and the input and the feedback that we received, the role of the consultant to the issue was made optional. Why the role was made optional? Because we received some interest from the companies saying that why can't we bring our prospectus ourselves? If we are capable enough, if we can perform ourselves, why can't we bring? So the space is open. If the issuer feels that it will not be able to do that, the issuer will appoint the consultant to the issue. Otherwise, it's their discretion. For the debt securities, we have mentioned that the consultant to the issue, who can now be the consultant to the issue. But for the equity securities, we have proposed that equity offerings, that a consultant to the issue, these entities can come as consultant to the issue in joint capacity with the securities broker. The purpose is again to make the process more competitive, to increase liquidity, to increase the supply of the instruments. And that's the basic reason of this change. With regard to the appointment of consultant to the issue being made optional, it's only the appointment of consultant to the issue that is being made proposed to be made optional. The rest of the entities are required to be appointed as the case may be. For example, if there is a debt security trustee requirement, it has to be appointed for the debt issuance. So all other related parties, the book runner, the banker to the issue, these entities, if required, these parties, if required, are to be appointed. There is a question with regard to the who will be responsible without the consultant. Even in the presence of the consultant to the issuer, the responsibility, ultimate responsibility lies with the issuer. The issuer is responsible for all the contents that have been reported in the prospectus, and it is supposed to take the ownership that there is no misstatement, even in the presence of the consultant to the issue. So that will fall to the company, the directors, the issuer itself. There is a comment with regard to the cost of debt listing. Uh, as mentioned above, that these all changes have been proposed specifically to reduce the regulatory burdens, to reduce the cost, to make the process competitive, as time and again stated in here. So these are the things that will hopefully reduce the cost. However, if you have some good suggestions, you can also share that. So there is a question that in case where the banks, DFIs, audit firms are appointed as consultant to the issue and they are required to work in joint capacity with the securities broker, do both entities need to be licensed as this consultant to the issue? Yes, both entities need to be licensed as consultant to the issue. Otherwise, they won't be able to provide the service. In continuation, the question is where a company wants to undertake an IPO on their own without appointing any external party who would undertake the book runner role. Consultant to the issue and the role of the book runner are two separate roles, and the consultant to the issue is optional. So the issuer decide to do it by itself. But if the book runner is required, the book runner is required. There is a query with regard to the quotation of the bid and ask spread on daily basis and the instruments for which the market maker has agreed to act as market maker. Yes, there is a requirement, and the market maker is supposed to bid and place the bid and ask quotes on a daily basis on that screen. There's a question, is there any time limitation on prospectus approval? In December 26th amendments, we have already incorporated and reduced the required timelines, and that has already been incorporated in the PSX regulatory requirements. At the end of SECP, we try our best to process it at the earliest. Presently, few delays were seen, and that were because of the COVID scenario. Otherwise, it's generally expeditious. Are there any minimum capital requirements for the market maker, securities broker, equity base, for example? So as mentioned earlier, that market making framework basically falls under the PSX rule book. So PSX is making the changes, requisite changes, and hopefully they'll be shared soon for public comments that will incorporate all the requirements for the market maker. There is a query with regard to whether the optionality of the appointment of consultant to the issue is for both the debt and equity instruments. It is for both the debt and equity instruments. There is a query where what is meant by credit underwriting in the amendments. The credit underwriting has been written in relation with the role of the book runner, and that relates to the margin collection. There is a query that says that there is a certain criteria, there was a certain criteria and is a certain criteria for appointment of consultant to the issue to offer their services. Shouldn't there be the same kind of criteria for the issuer to perform the role of the consultant? Again, the purpose of the consultant to the issue is to bring in the prospectus along with the complete requisite documents, information that we have already made part of the public offering framework. So if a consultant or the issuer itself is bringing in with all the requisite requirements, so there is no other criteria required for that. There is a question, is there a requirement for a separate book running license for debt issuances? So the book running license is for both the debt and equity issuances. There is no separate license for debt or for equity. The query is that parties coming in as consultants, book runners, and other roles need not to be independent anymore. Does that mean one party can undertake both or more roles? Yes. A single entity, if registered as per the rules, can undertake the roles. There's a question with regard to the applicability of takeover law in terms of the independence requirement between the CTI and the acquirer. Um, Takeover law requirements will prevail as it is. There is no change proposed through this. This is public offering framework. The changes proposed are with regard to the public offerings. There is a query that by when we can we provide our comments to the commission, keeping in mind that almost 10 days were lost due to Eid holidays. Technically speaking, the last day for submitting the comments is by tomorrow. However, since because of the Eid, and again the webinar session was delayed because of the Eid session, otherwise we were expecting to do it a little earlier. We'll extend it by this Friday. That will be 5th of June. So you can submit your comments by 5th of June. There was, yeah, I found it. There is some question with regard to the clean CIB for the nominee and independent directors. So the fit and proper criteria for appointment of the directors is there, but for the purpose of coming for public offering, there is no such requirement. So this is just kind of a relaxation, and the independent directors and the nominee directors generally doesn't have much role in the sorry for the disruption. Perhaps I muted myself. I was sharing the CIB for the nominee and independent director relaxation. The requirements in general, wherever is applicable in other frameworks exist. It's just for the issuance of the public offering, for the public offerings framework. A lot of participants have asked for sharing of the presentation and the material that we have just discussed. This will also be live streamed, and it will be available on the Facebook and the LinkedIn. It will be available on the YouTube, and then subsequently will be shared on the Facebook as well. I have seen some participants from PS6, but if I can't identify right now, I will call them and make sure KG PS6 amendments are also uploaded for comments before the end of this period of comments, so that we can simultaneously get it. There is a question with regard to the ECIPs. On the consultant to the issue, there's no such requirement. However, agar aapke zehn mein, if you feel like there is something like mentioned in the framework, do highlight that, we can address that. The ECIB requirement is of the issue, or is on the issuers, not on the consultant. Let me. I have tried to address almost all the queries, but in case if you think that you have shared a query and I have not, you are welcome to repost it again so that I can read it and respond.
और वो इसका हिस्सा भी तो नहीं है
There is a query, why has SECP not allowed PSX to charge any fee on bond issue? Isn't it unfair to shareholders of PSX? First of all, this has not yet been, this is not the part of these amendments, first. And secondly, the bond, the fees that we, SECP is not charged, PSX is not charging is on the government securities. And again, the purpose is deepening of the debt market. So there can be multiple other ways of charging the fees, and it will be encouraged to see supply of instruments and trading taking place. So fee should not be an impediment for development of the debt market. ECIB comment again popped up. I have just responded to it. ये तो अच्छी बात है. I have just received a comment from the participant from PSX that is saying that notice for solicitation of public comments on amendments in regulations was uploaded in PSX website yesterday. So it addresses your query. Why don't SECP introduce the concept of AIM, alternative investment market? GEM, growth enterprise market. The purpose of that again was to provide an alternate market. It has been active since December 26, 2019, but till date, no such listing or no one has yet approached for getting listed on the GEM market. It seems that I have not received any question for the last 2 minutes. And So I would like to thank you all for the participation here and would like to hand over to Commissioner Saab for the last comments. Sir.
Thank you very much, everyone, for the participation. I was very encouraged to see that there was very active participation from all the stakeholders. So what I will request from all the stakeholders that please do share your comments, your observations, whatever you feel on these regulations through email or whatever mode of communication that is comfortable for you. But please do that, as we have enhanced now number of days by 2-3 days. So what I will request you that by Friday day, and please do share your comments with us, and we will try to improve and try to facilitate to the extent we can do. Thank you, everyone.